Hey there, everyone. Dave Keller here with Market Misbehavior. Today, we're going to look at the Nasdaq 100 ETF, the Qs, and we'll go through 4 potential scenarios in what we call our choose your own adventure style exercise. We last did this exercise for the QQQ 3 months ago. We'll actually look at what happened. Which of those 4 scenarios actually played out? Were you right? Were you close? We'll look at the 4 scenarios from then, see how things played out. We'll also lay out 4 new scenarios for the next 6 to 8 weeks. Review the scenarios, put a comment below, and let me know which scenario you see as the most likely scenario and why. Before we get to those 4 scenarios and those implications, 3 quick things I wanted to tell you about. Number 1, super excited to let you know we will be coming back with a live market recap show every weekday after the close very, very soon here on our Market Misbehavior YouTube channel. You might have caught our live test earlier this week. It was pretty successful. Just need to work out a couple of the details. We will be broadcasting live here on YouTube. We'll also be doing it over X as well as Facebook and potentially some other platforms as well. So make sure you follow me, Market Misbehavior, if you're on Facebook. On Twitter, I'm at DKellerCMT, and here on YouTube, just make sure you have the notifications, the little bell dinged, so that the next time I go live with a market recap that you can be a part of it. You can actually ask questions during the daily show. I'll try to address questions as they come up. Should be a lot of fun. I'm super excited to get back to a daily market recap show. Second thing, I'm here in San Francisco. You may see from the hotel room, a little different than normal. We're in San Fran for the TSAA annual conference. That's the Technical Securities Analysts Association. It's the oldest technical analysis society still running here in the United States. It was founded by the late Hank Pruden many decades ago, and I'm super excited to reconnect with legends in the industry like the great Bruce Frazier, the active board, guys like Mike Jones and Brett Valome and others doing such a good job of keeping this organization active and doing the good work at Golden Gate University here in San Francisco. So excited to be here for that. Finally, I want to let you know about Seeking Alpha. We have a relationship with Seeking Alpha. If you go to marketmisbehavior.com/Seeking Alpha, you can find more information about their subscription services. I'm a big fan of their quantitative model, their scanning capabilities. I often used a quantitative model as an institutional investor. We focused a lot on what we called alpha models, trying to look at the characteristics of successful companies and which stocks were setting up in similar ways. They actually are raising their prices at the beginning of October. So if you go to that link today, marketmisbehavior.com/Seeking Alpha, check it out. You get a little better deal by using my link, and you'll be able to get in and lock in a price before their rates go up in just a couple weeks. So make sure you check it out today. Now let's get to the 4 scenarios and their implications. All right, so we last did this exercise back in June, mid-June. This is where we did the video, and you can see we laid out 4 scenarios: the super bullish scenario, the mildly bullish scenario, the mildly bearish scenario, and the super bearish scenario. You tell me, but I'm going to say that scenario 4 is pretty close to picking that right off. Now, literally, I look at the charts and I analyze the patterns, analyze the trends, and then lay out 4 potential scenarios based on the time frames, the next 6 weeks or so, and what sort of potential directions we can have. Now, what's interesting is from mid-June to mid-July, it actually followed scenario number 1 almost perfectly. And I remember revisiting this chart in mid-July and thinking, wow, scenario 1 is playing out beautifully. But all of a sudden, about a week later, it looked like scenario 2 is going to be right. About a week after that, it looked like scenario 3 might be the best one. But by why all of a sudden is done by early August, scenario 4, indeed, I would argue probably the best one. And it was within a hair's breadth of the tip of the arrow that we laid out as a potential low, given that very bearish scenario. Now, what's so interesting is from that point on, right, from the end of July now into mid-September, the market's rebounded obviously very, very quickly. Now, while the S&P 500 is testing all-time highs after this week, the Nasdaq 100 looks a lot more like an NVIDIA, sort of a consolidating, what we call a coil pattern or a symmetrical triangle pattern. Here's an updated version of that chart laying out the 4 scenarios that I would like to describe for you here today. And again, the way this works is listen to the 4 scenarios. Think about what those scenarios might mean for your portfolio. Think about what signals and patterns you would recognize on the charts or from other market dynamics or market forces that would help you validate that that was the actual scenario. And think about how you would manage risk if one of the very bearish or very bullish scenarios actually plays out. So here are the 4 potential scenarios. Now, here's that symmetrical triangle or that coil pattern that I mentioned. That's when you have lower highs and higher lows. You can see we have a narrowing of the range. Now, Usually, I remember John Murphy wrote years ago that about 2/3, 3/4 of the way through the pattern is when you usually have a break. In a coil pattern, that means based on the measurements, we're kind of right at that point where a break usually happens. Now, the pattern on its own does not prescribe which way we're going to break, right? It doesn't automatically say this is probably going to break out to the upside or break to the downside. You have to wait for that valid break of those resistance and support lines that I've indicated in purple on my chart. Let's say for the super bullish scenario that beginning of next week, we break right out to the upside. And in the super bearish, bullish scenario, number one, that means we very quickly get above the August swing high. And I would say the super bullish scenario from here means that we've already had the sell-off, right? That the July sell-off was it. The recovery that we saw in mid-August into mid-September is sort of the beginning of a much broader recovery. And the super bullish scenario from here means the market takes the Fed's first rate cut, likely coming at the September meeting next week, takes that as a very bullish sign of optimism going forward. The market is going to have a Goldilocks scenario. Soft landing is playing out beautifully. And the Nasdaq 100 makes a new all-time high by the end of October. Now, what's interesting about that scenario is that defensive sectors, things like utilities and REITs and consumer staples, have been looking awfully good in August and September. So I would say the super bullish scenario probably means we have another leadership rotation. Unlikely, I would think, that growth ends up leading. I think in this scenario, you still could see other areas of the market do quite well, like industrials or materials or financials or healthcare. But for the markets to break out, for the Nasdaq 100 in particular, to make a new all-time high in the next 6 to 8 weeks, you would have to have NVIDIA break out of its own coil pattern to the upside. You have to have a chart like Meta, which has been trading below resistance now for a number of months, actually break to new all-time highs. You'd have to really see a resurgence of optimism, particularly in the mega cap growth names. Maybe the return of the Magnificent Seven is what we would call that particular scenario. So that's scenario number one, the super bullish scenario. Scenario number two is more of the mildly bullish scenario. I would say in this scenario, we still break out of that coil pattern to the upside. I would say we probably do not get to new all-time highs, and that's what would differentiate scenario one to scenario two. So we sort of do complete the pattern in a bullish outcome to the upside, but there's not enough upside momentum to break above the July peak. And I think this could be a likely scenario because that would mean that the Magnificent Seven stocks probably don't return to a leadership position, right? If things kind of do well, and if other areas of the market, more value sectors like financials and industrials, do quite well, those stocks will look great, but the benchmark is still geared toward the growth sectors like communication services and technology. So scenario two is probably what would happen if things overall recover fine around the Fed meeting, but growth is still not in a leadership role and charts like Meta still have not broken out. So that's scenario number two, the mildly bullish scenario. Now we get to the bearish scenario. Scenario number three is the mildly bearish scenario. That, I think in that scenario, we do not break out of this coil pattern to the upside. As a matter of fact, we probably break below the lower boundary here in the next week or two. This would probably follow more of the traditional seasonal pattern in September, which often tends to be the weakest month of the 12. Maybe this sets us up for a major low in October. In this case, the growth leadership certainly does not recover particularly well. Charts like NVIDIA fizzle out. They've had a nice run in the last week, but that's about it. And they start to trade more to the lower end of the range. Stocks like Meta continue to bump up against resistance and fail to break out. You know, maybe the language from the Fed is less optimistic, more measured, more tentative about the optimism of Fed governors to navigate this soft landing. Maybe inflationary concerns continue to plague this market. Maybe the interest rate environment continues to be a challenge for investors, and as a result, bonds probably still do quite well relative to stocks, and as a result, defensive areas of the market are still thriving, and the leadership is really not getting back to an optimistic state. That's scenario number three, and I would say in that scenario, we probably still hold the September swing low, which is around 450, 448, we'll call it, on the QQQ. You always have to have a doomsday scenario. That's always scenario number 4. And worth remembering, the last time we did this back in June, 6 to 8 weeks later, we followed scenario 4 almost perfectly. Although it didn't start out that way, it ended that way. So what would that scenario look like here? Well, again, very similar to scenario number 3, we would have to fail to break out. We would probably break lower. A lot of stocks that have looked quite good in the last week, it ends up being a very temporary thing around the Fed meeting. There's another big sell-off as people question the Fed's ability to navigate this soft landing that I think is being priced into the market here this week. I think in this scenario, we retest the August lows and we get down to sort of the 420s. And by late October, we're trying to determine if we've seen enough to validate a confirmed October low, whether that August low will hold and whether 420 to 425 ends up being the low for the fourth quarter. Those are your 4 scenarios. Scenario 1, the super bullish scenario. We rip to the upside. We break out of this coil pattern. We don't stop. The Qs get above 500 and just keep going and push above the July peak in October. Scenario number 2, the mildly bullish scenario. We still break out of this coil pattern, but limited upside because growth leadership remains muted and value areas of the market, while strong, are not strong enough to push our benchmarks higher. Scenario 3 is the mildly bearish scenario. We probably sell off here in the next week or 2. We break to the downside, but we don't sell much below that September low around 450. Scenario 4, the very bearish scenario. We start selling off. We start selling off big, similar to what we saw in July. We have another big leg down, which leads a lot of investors to question strength potentially going into November and December, which again, usually in the average year are 2 of the strongest months. But the pessimism that we witnessed in October makes it harder to believe that a strong recovery can happen in November. Which of those 4 scenarios do you see as the most likely and why? Don't forget to drop a comment. Let me know your vote and your justification. For Market Misbehavior, I'm Dave Keller. Have a great weekend. We'll see you again soon.